This conference will now be recorded. This conference will now be recorded.
All right. Um, Good evening, everyone. I want to welcome you to the first in a series of um, presentations regarding extended healthcare. I've made the attempt to invite as many people as I can to these next 5 sessions. What you'll hear will be some pertinent and timely information. We hope that you'll be benefited by this information that we'll share. I believe it will actually help change your family dynamics so far as planning for your future. I know the holiday season is the time of year that we get together as families and we discuss many things. And I hope that this will be one thing that in your discussions and dealing with your family over the holidays, you will be able to go into and really have a fruitful discussion on family structure and future and different things like that. Again, my name is Harvey Burnett. I am the owner and sole proprietor of Dunamis Insurance and Business Services. We're a small firm in the heart of Central Illinois, Peoria, Illinois, to be exact. Been in the business now for roughly about 20 years or so on my own. My experience in the insurance industry is roughly over some 25 to 27 years. And during that time, over which that time, I was also employed by other companies such as the Equitable Financial, which is now AXA Financial, and New York Life, which still exists under that name, and a couple of others as well. The insurance industry itself has changed over the years. One thing that we find out now is that there are probably about 10,000 or so, or at least so far as estimates are concerned, about 10,000 or so people turning age 65 every day within the United States. The reason that the industry is changing because its population of clients and clientele is changing. Its demographic is getting older. There's a younger demographic, especially among the millennials and all of that. But their concerns are slightly different. And the insurance industry has had to adopt or adapt itself to that, which it is doing. The concepts that we'll hear tonight are basically not new concepts, but they are concepts that have responded or what I want to say evolved due to this changing client market and this changing demographic of American citizens that we are experiencing within the United States. So we'll talk about that to some degree and try to review the issues pertaining to that. I'd ask that you individuals that are coming in would certainly mute their phones or devices. If you're on the phone, please mute your phone there. If you're on the computer, don't make your mic active. But at the end of the session, we will certainly have opportunity to take questions, comments, or anything that you would have to add to this particular discussion or to clarify any of the information that we've gone over. Also, you'll see in the box once you've registered and signed in that there is a little chat box there, and you're certainly welcome to type in your question, and I'll do my best to save that for later. In fact, it would probably be better if you, as I'm talking and you get a question, go ahead and type that in or write it down on a separate pad so that way you won't forget it as I go through information. And certainly we'd like to revisit your question. Okay. All right. With that said, we'll go into this particular discussion. Um, there are a few issues that we want to talk about and a few things that we want to deal with to lay the foundation of this particular presentation. Number one, what are we talking about? We are talking about issues pertaining to chronic and critical illness. These chronic and critical illness situations can dramatically and irreversibly change individual lives. And these are just factual things that we see and know. According to the American Heart Association and the American Stroke Association, for instance, these critical illnesses, such as heart disease, stroke, and really account for not only a major cause of deaths within the United States, but also a major cause of life changing situations. In fact, on the third bullet point down, strokes are, major cause of about 133,000 American deaths per year, but they're also a major cause or a leading cause of long-term disability within the United States itself. What we've also found out is, according to current CDC trends, the Center for Disease Control, as they look at the rate and the incidence of stroke, we find that the rate and the incidence of stroke is actually on the increase within the Black or the African American community in particular. And right now, there's really kind of a question as of why that is. Is it diet related? Is it activity related? Whatever the case is. And so there is a great deal of concern among these things. In fact, stroke is on the increase heavily within the Black population, but it's also on the increase within other ethnicities across the board. The Hispanic community, also white, and all of those communities. So we find that these diseases or these chronic illnesses are on the increase, even in the day and the age of medical advancement. And so these things are happening very prominently as we take a look at the climate and the situation of, what's going on within the health of our communities, families, and among individuals. Um, Chronic illness, someone says, okay, what is chronic illness? Number one, to know what chronic illness is, the gentleman named Ken Frazier, who was the chairman and the CEO of Merck. Merck is a major drug corporation in the United States. And remember, this particular gentleman sat on President Trump's healthcare committee until he resigned. I believe it was earlier in the year. But Ken Frazier is a big name in the healthcare industry. And he noted on CNBC that the number one cost associated with healthcare in the healthcare system is chronic illness, things like diabetes, things like Alzheimer's. And so this is what chronic illness is. And I often tell people to identify a chronic illness, you got to look at an illness that really has the potential to change your complete lifestyle or to put you in a situation to where you need, where your life is severely impacted. ALS, we recently saw on TV where there were a few individuals who had suffered ALS. The creator of SpongeBob, a gentleman named Hillenberg, recently died of ALS. ALS is a chronic disease and it's one that has been, of course, responsible for death, but it's also responsible for serious and dramatic change of lifestyle. So we've also seen individuals that have suffered from chronic disease, chronic illness, and those things, no matter what financial level that you're at or what financial boundary, these things have a serious and direct impact into the life and the health of individuals, and not only the individuals themselves, but their families. A chronic illness is also identified by the individual inability to perform at least two or more of the seven common ADLs or activities of daily living as a result of an illness. See a little typo there, but as a result of an illness. The common ADLs and things that you should know that trigger most health insurance programs that are associated with chronic care or chronic benefits are eating, bathing, transferring, continence, dressing, ambulation, and the ability to remember or dementia, mental dementia. And in many cases, when a person has the latter, the ability to remember or their mind is incapacitated, that particular condition takes over and causes a diagnosis of complete chronic illness. And so, whereas it would take two, either eating and bathing, to qualify a person as being chronically ill. If a person couldn't eat, they're not necessarily chronic ill if that's all that they can't do. If they can't transfer, they're not necessarily considered to be chronically ill. However, if a person has a certain degree of dementia to where they are a risk or a danger to themselves, that normally that particular diagnosis or that particular illness or problem uh, makes a total person chronically ill, even if they can eat, bathe, transfer, their continent, they can dress, and all of those other things. And how many times have we heard on the news and seen where people have actually walked out of nursing homes or walked out of places on their own, and some of them, have been found across town or someplace else. Some of them didn't make it because they got out and died. Or how many times have we visited some of our relatives' homes and we found oftentimes, a pot on the stove and the relative sitting in the living room, unaware that they had even put the pot on and unaware that there was an imminent fire or danger in their surroundings. These chronic illnesses and dementia certainly are very problematic. They're very stressful, and certainly they could be life-threatening, whether that is due to physical, the progression of disease in the person, or whether that be, a situation like I've outlined where a person actually damages themselves because their mental capacity has diminished. So this is chronic illness, and this is why this thing or this particular presentation is so vitally important. As we look further, one thing that seems to exacerbate the problem is that, and something that we can say is a good thing. I mean, we want people to live as long as possible, but according to current statistics or current actuarial data, people are living longer now within the United States than ever before. With the exception of the last 2 years, there have been a slight, what I say, half a percentage point drop off in the last 2 years of life expectancy. But generally, since 1980, the life expectancy has dramatically increased for men, over 7%, and for women, over 6%, just since 1980. Current studies indicate that 70% of individuals, 79% of women over age 65 will require some form of long term care services during their lifetimes. And over 40% will need care um, in a nursing home for some period of time. So these things happen. These things are real, and this is the landscape in which we are living. There's stress on it. Then there's the financial considerations of extended illness. Now, I know when we look at extended illness and and especially among our loved ones, it's an all-in proposition. Many of us say, and that's the basis of the foundation of this particular presentation, is because we love our families and will do anything for them. But there is actually a physical cost that cannot be overlooked while individuals are working nowadays. And we've seen the commercials on TV. A lady was on a particular commercial. She said, "Well, that's the only reason I'm working." I think her age was 80 plus years old. She said, "That's the only reason I'm working because I can't afford my medication." And so she says that she's working in order to afford her or pay for her medications and different things like that that she needs. And so those are real situations and real considerations. But there are other considerations too, just the sheer cost of what it takes in order to be taken care of. Now, I want you to know that extended care, extended health care, falls through the cracks, and I'll explain that here as we go through the presentation. But extended healthcare, there's nothing out there except for a particular type of insurance designed to address that need that takes care of it. Your basic healthcare plan that you bought doesn't take care of it. Doesn't take care of what I'm going to talk about tonight. Your basic disability insurance plans doesn't take care of it, and you'll find out that the government will take care of it, but they'll take care of it their way and for a certain cost, and that cost will cost you everything that you've worked for as an individual. And if you don't know how to arrange these things, you could be in a very serious, problematic situation. But according to current studies, when we look at where the money will come from for our extended healthcare costs, according to current studies, a person making $50,000 a year, uh, there have been only able, on average, to save within their retirement savings about $63,000. That's the average from coast to coast in the United States. There may be some certainly more successful, maybe some certainly less successful. But on average, that's about what they've been able to amass. Then, according to Fidelity Investments, the average 401k balance in 2016 was slightly over the national average. It was about $92,500. And so you get about $90,000 to $100,000 in your 401k. That's a pretty good little nest egg and a pretty good sum of money. But that's about the average. And what we'll find out is that number there is wholly inadequate when it comes to extended care, even as just by itself. And we'll look at the next bullet point because according to the National Care Planning Council, the average nursing home stay, a person stays in a nursing home, which I'm a proponent of avoiding the nursing home. But the average person or the average stay in a nursing home is about 835 days at the average of about $200 a day. And that's the 2018 cost is about $167,000, 167, 100, $170,000 that a person would just have to have. So if all you've got in your 401k is about $100,000, you're still 67,000 or so, $70,000 short of being able to adequately address your potential on average healthcare need in a long term. And I'll tell you why that's important here in a second. So there are some serious financial considerations to think about here. Then the problem that I outlined before is the problem of government intervention. Many feel like, okay, well, if I get ill, the government's going to take care of me, and they will, as I said, at a cost. Some of you that are listening to this will qualify for what's called the federally funded Medicare Part A and Medicare Part B, and those are what's called social insurance programs. Those Medicare programs are there, and they're there to provide a fail-safe for ongoing medical care. But Medicare Part A or B, and even supplements, or what used to be called Medigap coverages, do not provide extended, permanent, ongoing care for individuals. In fact, their care, as we'll find out, is very limited in scope. You've got about 100 days worth of care, permanent care that you can have in this particular type of scenario. And beyond that, there's really nothing out there that will really cover the long term, except you go through this process that I've outlined here as spin down. Spin down is very important for you to understand, because when the state administers what's called the Medicaid program in most states, or just about every state that has Medicaid, which I believe just about every state in the United States has that particular program, is a state administered program, and it is designed to take care of those who are impoverished, or those who have a low amount of assets. So this is why the term spin down comes into place, because the state says, hey, we'll intervene, we'll take care of an individual on a full-time health care basis, but we've got to be paid back first. And how we're going to pay ourselves back is from that individual's assets or from their income coming in. So spin down requires, in most cases, that the cash assets are spent, which includes any significant amount of cash, any bank accounts, any what I want to say retirement accounts, any funds, any annuities that are paying. The Medicaid program actually will use that money up first, or require you to use up that money down to about a $2,000 minimum threshold. You can also retain a primary residence and modest transportation. But other than that, you're going to have to go through this process of spin down in order to acquire the Medicaid portion of benefits. And so that's very important, because you spend a lifetime accumulating assets, and so individuals normally do not want to get rid of and or dump those assets, or have to have those assets taken away or accounted for in order to take care of themselves, or to receive care at a certain point. Because, like I said, the Medicaid will cut off its, or the Medicare will cut off its at some point, and any extended health care that you had other places, whether that be through your primary health care, will not target this ongoing specific care if a chronic illness comes into effect and comes into play. So this becomes a very explosive and powerful situation, and one that is very discouraging to many families, because you felt like, hey, I've worked and I've created this, and now at the end of the day, the government is going to tax me and charge me and take this away from me. So that's a very important thing, and it's a very real thing for many individuals. Most of you who are listening to this presentation tonight have had the experience where you've had to take care of family, and some of you are in situations to where you're looking at, what family is going to take care of you as you go forward in your life, and you face your own future medical care. And so this is what we're looking at. This is a very real situation that each of us will have to look at and kind of reconcile in some way, shape, or form. So with that said, let me push on just a little bit further here. So those are the issues that we're dealing with. Those are very important issues. Where is the help coming from? Who's going to pay for help if we need help, or if my family needs help? Who's going to pay for them in that? That reality came, front and center to me here recently when my wife was went through an illness and a recent surgery. Well, we looked at the end of the day. saying, okay, we've taken care of this one, we've taken care of that one, we've done this, we've done that. But, I was faced with the reality that, one or two wrong moves here, one or two changes, and now our family is looking at a totally different reality. You know, how am I going to take care of my family at this particular point? What are we going to do at this particular point? And so that becomes very important in order to look at. So let's deal with some of the facts and some of the things that we know, because you can't deal with things that you don't know. There's no way to predict them, but you sure can give those things that you do know, you can give them a good shot and really go ahead and take care of them. And that's what we want to address tonight. Georgetown University put together a long term care study in 2007. And in that particular study, they showed that 41% of long term care is provided to people under age 65 who need help taking care of themselves due to diseases, disabling chronic conditions, as we've discussed earlier, injury, developmental disabilities, and also severe and mental illness. Individuals between the ages of 18 and 64 also comprise almost or nearly half of all the long term care that is given out in this country. Individuals between 18 and 64. So if you're over that 64 threshold, God bless you, and that's a good thing because you're in the latter half of that group, and you're in the other part of the group that is certainly facing the horizon of long-term care. But what many individuals don't really realize is that the first part, between 18 and 64, there is nearly about half of all individuals that's on long-term care are in that particular age group themselves. And so these things happen. As I said, I've witnessed recently a particular pastor friend of mine who suffered from a stroke, and he has a chronic condition now, and he will never pastor again. But that's happened. I've seen school teachers, I've seen principals that the same thing has happened to at various ages, and so their life has changed. And as we stated before, Medicare Part A only covers 100 days of any skilled nursing care, but care must be received in a nursing home for them to step in. And non-chronic skilled nursing home care must be preceded by at least a 3-day hospital stay. So there's all kinds of caveats and nuances to government intervention and social assistance or social insurance, but we want to avoid that. But let's look at here at the real cost of all of these things here just for a minute. Somebody says, okay, now what is the cost of these type of things? Well, currently in an assisted living facility, and you can find this information at genworth.com. Genworth is one of the companies that we represent, but Genworth did a cost care survey, a cost of long-term care survey study. And they've done this since 2004, and actually their numbers have been spot on point over the years, both their projections back then and what the actual results have been. And currently, right now, I know in Illinois, for example, the current annual cost of assisted living is about $48,360 a year. That's $48,000 just for an assisted living facility. And many of the assisted living facilities are very nice, sprawled out complexes, and you can see them. They've popped up, become a very popular alternative and option, and they've popped up all over the country. Well, it costs about $48,000 to live in an assisted living facility in Illinois on average. And in just 10 years from now, that cost is going up to $64,000, about $65,000 to be in an assisted living facility. Let's look at other alternatives. Someone said, well, we'll have a home health aide come in. We'll have a young lady or a young man come in that will provide home health care, and they'll give us that. Well, the annual cost of that in 2018, I know in Illinois, is about $51,000. In just 10 years, that's expected to go up to about $69,000 a year. If the average 401k has what about $92,000 in it? That's not going to be what, about a year and maybe a year and a half worth of care. That's not going to make it, even for a home health aide. And that's somebody coming in, taking care of the individual on really, on a full time basis. So then, of course, the a nursing home alternative. And what we used to see was a nursing home used to be a modest cost, and there used to be a lot of nursing homes that were some better than others. There were some that you knew not to go to, but then there's been a lot of pressure in the nursing home area, and most of these homes have to come up to standard and code and different things like that. But there used to be a modest cost there. But the nursing home, even for a semi private room now in Illinois, is about $195 a day. It's almost $200 a day just for a semi-private room, about 70 grand across the state. In about 10 years, that's expected to be about $262 a day, or $95,000 just for nursing home only care. Okay? Just for nursing home only care. So this is very important. Those are the facts. That's what we're dealing with there. The average long-term care, as I said, lasts about 2 years and 3 months, and it costs approximately $170,000 or so per individual, and that's based on just the numeric averages. Okay, so what are we saying? Well, who is taking care of these individuals? Surprisingly enough, 2 out of 3, that's 66%, of older people with disabilities or who are chronically ill receive their care from a family caregiver. Okay. Now we've also let's go back just a little bit here. If that's the case, and I'll go back one more. Here we have a home health aide that's full time, earning $51,000 a year. Well, most individuals, don't have time to take off of their jobs or whatever, even as lovingly as they would love to take care of their family. Most of them don't have the resources available to pay themselves or to pay their families $51,000 a year just to take care of themselves in today's dollars, or even 10 years from now, $69,000 a year. However, the majority of people that are receiving care are receiving that care from family members. So what does this mean? More than likely, the family member is receiving nothing to very much less than what the home health aide is basically going to have to charge in order to do their care, in order to perform their duty. They say about 25% of the individuals receiving long-term care or health care receive a combination of family care and paid help. Only 9%, only 9% receive health, paid help alone. Only about 9% of individuals receive paid help alone. So what happens is, and what I'm saying is that in most of these cases, it's going to take a combination of family intervention. It's going to take a combination of professional intervention in order to meet the needs of family members. And because in most situations, the dollars are just not there, and individuals will come up short. So those are just the facts that we're dealing with when we deal with these particular situations. With all of that said, and I've said a lot about the problem, and I'm a problem solving kind of guy. And so, what is the solution? How do we solve the problem? Well, traditionally, we've solved it through traditional long term care insurance. In other words, I've looked and I brought you what has been called a nursing home policy. And basically, I've said, okay, here's this particular policy. It will cover this. It will cover you so many $100 a day or so many $100 a month. If you go into a nursing home, it will either reimburse you back for expenses, or it'll pay first dollar costs or cash benefits. It'll just send you a check every month and you distribute that check as you want. But this is what this particular insurance will do. And it was qualified under governmental regulations. In other words, the government reviewed the policy type, or this particular policy type corresponded or complied with the government regulations, and you were able to have that. But there's a few problems that long-term care presented, and I'll use my pointer to point to right here. The first problem was the cost and the price. The long-term care insurance costs a great deal of money, and so that became an issue there. Also, most long-term care insurance, even though they started off with companies who were solid, very strong, what's happened because so many people are needing care and living longer, guess what happens? We run into rate increases. And I know I've sold quite a few long-term care policies over the years, and the worst thing that I see about them is the rate increases that happen, and they come whether a person doesn't use the policy at all, but those rate increases hit and kick in anywhere from 10 to 17 to even 20% per year. And so that can be a problem. If you can't afford it, then you'll lose the insurance. Then the worst thing about traditional long-term care insurance is that it's set up on a use it or lose it basis. In most cases, if you don't use the insurance, or if a person never suffers from a chronic illness or a disease to where they have to use the policy, they're the company basically thanks you for paying the premium, and you get no certificate. So there's no insurance, there's no indemnification or type benefit or payment back to the individual at all in the traditional set of long-term care, unless you bought that as an add-on for a cashback rider, and those cashback riders normally jack up the premium about 2 or 3 times. Don't want to talk down on long-term care insurance because it has been a failsafe. I've had clients to where the long-term care insurance has been a savior to their estates and to their family, providing them care. So there's been very much good that long-term care insurance has done. But this is one of the things that has evolved over time because of the climate and the condition of people, the demographic, the changing demographic that I was discussing earlier. One good thing about the long-term care insurance, another good thing, was that the premiums were tax deductible to a certain extent as well. So those are the things about traditional long-term care insurance. For a particular premium, you can get your chronic illness covered if you needed care, whether that was in home or in a facility. You could receive actual cash benefits for that to address that particular need. There are two other options that people normally use. One is to self-insure, as we talked about the savings. Many people are saying, okay, let me put money in investment and I'll save up $200,000, $300,000 that way, and we'll insure ourselves. But in that particular case, once you've spent out that money, which is a very possible reality, number one, is not guaranteed that you're going to accumulate that much. But number two, if you do accumulate that much and your illness lasts longer than the money, then you'll go into the next step, which is spend down. And that is what you wanted to avoid from the beginning. Then the third thing was wait and see. We don't address it. We just shuffle it off to the last possible moment. It will be silent about it, won't say too much, won't rock the boat. But what happens there? Normally, you end up going through spin down and also produce potential family heartache and trouble. So those are the main options, or the main ways that individuals address this type of problem. And that doesn't keep it from being a problem just because one closes their eyes, but is something that needs to be solved and something that needs to be addressed. Now, the adaptation that the insurance company has had in this is to create a new type of insurance, or to revamp, what I want to say, vamp up the type of insurance that has always been out there, and to realize the flexibility of the insurance and maximize some of the benefits that are contained within it. So now you'll see that there are what's called chronic illness life insurance being produced. And now let's talk about a few of these benefits first. Number one, chronic illness life insurance or life insurance with chronic illness benefits, has some price stability. And this is a main key. Price stability. That means just like any life insurance, once the price is established, it doesn't go up, doesn't increase, and it doesn't decrease. And so that rate is locked in. Also, the death benefits are guaranteed. And if the policy is not used for one purpose, it automatically, because of the nature of the policy, can be used for another purpose. If a policy is not used, if a person doesn't die, but they have outlived or lived longer until they have reached chronic illness time, or gone through a health crisis in their life, and they need cash benefits, now the new generation of policies will provide a cash return built within the policy. So that's one of the multi-use arrangements. A cash return built in through what's called an accelerated benefit rider. Some of those riders are a chronic illness, critical illness, and also a terminal illness benefit. And those are just three things that are attached to most of the new generation style of policies, which will allow that policy to convert itself into a cash pot of money so that the individual can use and have access to at the time that they need. Most of these arrangements are either on a reimbursement basis. That means that if a bill is made or an expenditure is necessary, the company pays that as a benefit, or a cash benefit, meaning that you can just go to the company and get a certain amount of money to take care of whatever situations that come up. They don't have to be situation specific, or don't have to be what I want to say invoice specific. So these are some of the advantage of the chronic illness life. Now, another little interesting thing here is traditional long-term care insurance is generally a health insurance, whereas chronic illness life, or life insurance with a chronic illness benefit, is a life insurance, and the underwriting on the two are different. That's vitally important because traditional long-term care insurance underwrites as a health insurance program, whereas life insurance underwrites as a life insurance program. Okay, that's very different from an actuarial standpoint. That means some people that will not qualify for a traditional long-term care insurance because of health reasons may qualify, may qualify for a chronic illness life, even with those same health conditions and medications, because the underwriting is two different categories. Okay, now what are some of the advantages? Tax-free benefit payments. You know, if a person buys $100,000 policy, then the policy goes on $100,000 to their beneficiaries free of tax. But also the benefits that are contained within that. Let's say if you need this particular money from the policy because of a chronic illness, guess what? Those benefits are considered to be tax-free as well. So there's no tax imputation to you as the individual. And also under this particular arrangement, there's a few things that it avoids. Number one, family pressure is relieved. The financial pressure is off. If a family member cannot sit with the individual to take care of them, they know that they have the money there to be able to provide the care and to provide the right individuals to do that, or they can take time off themselves. And if they align themselves right, they can even put themselves in line to be paid for that particular service to their family member, which is a great way to do it. There's no guessing under the chronic illness life. The benefits are there. You know that they're there. There's no price increases, rate increases, or decrease situations. You know what's there, so there's no guessing. And most of all, best of all, there's no state intervention in a chronic illness life insurance program. So these are the two options. These are the two differences of approaching this particular situation, and the advantages and disadvantages of both. And if I had to point out any one main disadvantage that the traditional long-term care insurance has, is the use it or lose it motif. That's very difficult there because many people say, well, you know, if I never use this particular insurance, it's cost me quite a bit. If I never use it, you mean I don't get a dime back? No, you don't under traditional long-term care program. Whereas under a chronic illness life program with a with that chronic illness benefit rider built in, yes, you do. You'll get that money back, whether it's in death or whether the individual continues to live. Let me go a little bit further here because the next part I want to just review the chronic illness life plus. Okay, why should you consider a chronic illness life plus to really kind of address this thing now, or this chronic illness or the potential chronic illness? Number one, we've seen from the statistics and the actuarial data is that the longer we live does not necessarily mean that the quality of our life will be better. There must be some type of intervention, or there may have to be some type of intervention that has to be done at some point. The longer other individuals, some of you are thinking about your parents, even if I'm speaking now, and other individuals that are, ahead of you or older than you, maybe whether they're aunts and uncles or whatever the case is. These particular type of programs will allow individuals to have needs taken care of at a specific certain price, and that price will not fluctuate and or change. They are designed just to do this. Now, there's only a handful of companies out of all the companies in the United States. There's only really a handful of companies that specialize in this market, and Dunamis is contracted with, I want to say, about 80% of that handful of companies that does anything in this particular market. So our outreach of companies is very extensive, and there's many different ways that we can design a program to approach this or meet this particular need. The advantages here that you'll have under chronic illness life is that life insurance and chronic illness benefits are normally received tax free. The insurance premiums are guaranteed for life. And additional advantages include a lifetime or shortened benefit period availability. How long will benefits pay? You know, if we only need benefits for 2.5 years, why do we buy a 5-year benefit policy? Why do we buy a lifetime benefit policy? Well, sometimes it's because of price breaks. Sometimes it's cheaper to buy a lifetime benefit policy than it is to buy a temporary or abbreviated benefit policy. And when I say that, is how much benefits are available to you from a particular day that you are diagnosed as being chronically ill or need chronic care, chronic care. You need chronic care from that particular point on. So how long will that last? Very important that you have enough insurance in place and enough coverage to be able to provide the benefits for as long as you will need them. And so there's all kinds of ways we can do it. What I'm saying here is that there's benefit periods, there's different ways, payment periods, there's all kinds of flexibility depending upon what company we're dealing with and what your outline goals and objectives are. There are also unrestricted or cash benefits or reimbursement benefit options available. Different companies have a different method of payment. Some want an invoice in order to pay. So there had to be an actual charged um, expenditure before they'll actually pay out a benefit. Others, it doesn't matter. They'll say, hey, this is how much money is available this month. If you want it, that's fine. If you don't, it stays in the policy and it just extends whatever coverage if there's a limit on coverage. You'll always have availability to that money. And there's multiple funding options. Some of you have monthly payments that you can pay for the coverage. Others have lump sums, or maybe even a combination. If you have a lump sum and you want to pay monthly payments, these programs are totally flexible, and it just depends upon what will meet your need and your objective. So that's chronic illness care, and that's why you would want to pursue this type of care in the long run. So, number one, in summary, let's just look at a few of the reasons that we discussed today. Number one, we talked about how the cost of chronic care is expensive, is one of the most expensive healthcare parts of healthcare that exists today. We talked about how these costs are predictable. how most individuals have not saved enough money to even address their chronic care or chronic illness care for an extended period or duration of time. We've talked about the strain that chronic illness may place on families and individuals as they seek to care for their loved ones that are in this particular type of situation. We've talked about how chronic illness is something that changes and alters life. And when we look at dementia, that is really one of the chronic illnesses or chronic diseases, could be in the case of Alzheimer's, that really significantly impair a person's well being and physical ability to engage within the community and all of those things. So, we talked about that and we talked about how to address it. We can address it out of our dollars and spend down the estates and the things that you've worked hard to accumulate over life, the things sometimes that you want to make sure that's passed on to future generations and to others. And we've talked about how that caring for or meeting the need, the financial need, will sometimes drain your estate if it's not arranged properly. So these are very important things, and we've talked about the solutions: traditional insurance, waiting and seeing, and also the chronic illness life insurance with chronic illness benefits bent, built in. There are many different types of chronic illness life, even though there's a few different companies that represent these types. And even within that, as I looked and compared these companies, there's quite a few different approaches to addressing this particular need. So we looked at all of those things, and I think the best thing to do from here is to discuss your situation, to give me an opportunity to go over your situation and review your particular situation along with your goals and objectives. One of the things we find out is that individuals who are in ministry are in a particular situation that they need these type of benefits outlined to them to keep them from having to experience um, uh, of being in need of benefits and having to have the church um, pick up those benefits or contribute toward healthcare expenses. There's a way to ensure that if you're a pastor or a minister and you're involved in that, there's a way to do that and ensure that. If you're a small business owner, there's a way to do that at the most tax advantage position possible. And so these things can be done, and you've got to know how to do it. And this is what we do at Dunamis, as we look at the situation and we are able to navigate through these storms and navigate through this swamp of ideas and try to help you arrange your affairs the right way. So that is my presentation this evening in a nutshell. I wanted to thank you for joining me for tonight. And any questions that you have, go ahead and type those into the chat box space there, if you have that, if you can see that on the right side of your screen. But you're certainly welcome to type in any questions that you have at this particular point. Also, you can always email me at dunamis1, and I'll put that in the chat box itself, dunamis1 at netzero.com. And dunamis1 at netzero.com is the way to email me so far as any information that you'd have, or if you want me to do an evaluation for you, you can certainly do that. Or you can call me, and I put my number out there as well, 648, area code 309-648-5351. So these things are vitally important. I encourage each and every one of you to do the best that you can to uh, address these particular ideas and do the best that you can to discuss these things with your family. I don't believe that you'll be sorry at all, because one thing that I've seen over the years is that our lack of information works to our disadvantage. Our lack of sharing information works to our disadvantage. In other words, when we don't share the information with our loved ones, and that just does not seem to work out best for everybody involved. And so I encourage you to take the time to speak with your loved ones regarding your long term care, potential long term care needs, so that way things can be done in the most efficient manner possible. If individuals or children don't have to come out of college, if they can complete their college education, knowing that the finances are there to take care of their loved ones, that's the best situation. And that's what you'd want as a loving parent anyway. You don't want individuals to lose anything. I know as a parent, I don't want my children to lose anything. For me, I want them to be able to go on and move on and be able to take care of myself, or to be able to provide the resources for them to take care of me at whatever point in time. And so we want you to think along those lines and to think what you can do. Now, what can you do if you are in a situation, or your family member is in a situation where you believe that they're uninsurable? Where there are ways that you can do some things. Yeah, there may have to be a trusted estate, or an estate trust set up in some way, shape, or form in order to move certain assets at a certain time, in order to provide certain care, or to make sure that certain care can be provided. But again, these things are general. You need to call us for a complete evaluation of your particular situation. And if you call us and let us know what's going on, let us know your thoughts, then we certainly will do our best to evaluate that situation and give you our best recommendation. So, with that said, if there's anybody out there that would have something to say, let me see here. I think I can release the microphone, and you should be able to use your microphone now if you wanted to say something to the audience. Other than that, we're going to sign off in probably about 2 minutes here. All right. All right. With that said, thank you so much for taking the time to join us today. Now, we have another seminar coming up, and I believe we set that thing for this Friday, I believe. We're trying to do a series of these. Hold on just a second. Yeah, we've got another event coming up, and that event will be this coming up Friday at 10 o'clock a.m. That's 10 o'clock a.m. We'll be back on this subject, and we'll be talking about extended healthcare planning. And if you have any questions that you'd like to bring, or bring anybody to this event, we will have another. Let me see if I can give you the access code to the number. Actually, I'm going to post the access code to that particular event. I'll post that out there, or maybe put it in the comments on this one before I sign it off. And I'll also post this particular video on Facebook, as well as put it in a web presentation as well. But want to first of all thank you for coming. Thank you for being a part of this particular presentation. I hope that it was profitable to you, and I hope that you were blessed by it. And we gave you some concepts or food for thought as we move forward and make all of the families of God the best that they can possibly be. Once again, thank you so much. This is Harvey Burnett, uh, bidding you Godspeed, and we'll talk to you next time.
This conference will now be recorded.